This is Alan Bush with the Daily Financial Forecast for Tuesday, May 8th. Starting out with the stock index futures, seeing prices a little bit lower. It does appear that there are some offsetting influences on the geopolitical front. One positive is that President Trump is scheduled to talk with the Chinese president this morning. So it does appear that there may be a better tone to the trade situation. However, it is likely that this afternoon, President Donald Trump may announce that he is withdrawing from the Iran nuclear deal, so that a bit of a negative. But that seems to be well telegraphed and may be already factored into current pricing in the indices. Longer term, I still believe that it is the low global interest rate environment that will ultimately dominate, and these geopolitical problems that we have had, although are likely to remain, I think will become less and less in focus as hopefully these issues get resolved to one degree or another. And of course that then would be supportive to the indices longer term. Over in the currencies, seeing the dollar index higher again as interest rate differentials remain favorable, with the Fed still on track to hike rates at its June meeting, while other central banks are likely to be relatively slow to hike rates, such as the Bank of England, which may not be in a position to raise rates until the end of this year, and the European Central Bank may not raise until sometime in 2019. Interest rate markets under a little pressure. Not very heavy volume on this weakness that we are seeing. Also, not really seeing any flight to quality buying in the Treasury, so that could suggest that there is a better tone to the geopolitical issues if the credit markets are not showing flight to quality strength. Still looking for only 2 more rate hikes from the Fed. I still believe that with the European economy slowing to some degree and European central banks not aggressively hawkish, that should cause the Fed to tone down possibly some of its hawkish rhetoric. So only look for 2 more rate hikes from the Fed and not the 3 more that many analysts are currently predicting. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.